Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 8th of December, 2020. This is episode number 1894. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the pre-market summary sheet shows overall mild risk-off posture or sentiment coming into today's session. The market's still driven by the stimulus, the distribution of the vaccine in the UK, Brexit, and also some US election issues. I believe today is the last chance to overturn the count or something like that. I don't remember. I read an article about it yesterday, but today is relatively significant for the 2020 election. You can see that money flows are coming out of the indices, flowing into some commodities, the gold, but also the 10-year note and the 30-year bond, as well as the euro bond, and also into the dollar and the franc. Um, Copper's off again, silver's off again, and crude is off again. And the overall stance of the overnight inventory, we're currently at 185,000 at the time of this print, 177,000, and the overnight session is considered normal. The volume considered normal up to 398,000. So far, 23 and a quarter points in the overnight session, about half of what we would consider normal, or it's not half really. The point of control of those overnight ranges is somewhere around 20 or so. Up to 50 is considered normal for the last 252 days or a year of trading. The overnight inventory is 61.9% short. This is from the session close at 4 Central, 5 Eastern versus the pit close. And the market condition overall in the overnight session is balanced. So that's the summary of today. We do have some key earnings. I'll let you look those up, and that's where we stand. Really coming in, it does look like the lower highs continue today. It looks like we established one-time framing down in the daily on the ES. A very, very, very boring day yesterday, and it looks like we're going to continue that trend today. So we're in a pullback mode currently. Buyers are not able to hold higher prices. Looking at what was expected yesterday versus what we got in our review segment yesterday, the primary scenario is a dip into 82, a push higher into 3,700, and hold steady in the 36.95 area. The secondary is a push towards 3,700 to 3,700, potentially pushing it, pushing that high, and then coming back and finishing somewhere around 36.90. Scenario 2 was in play yesterday, an early push higher, led us back down, and then we finished basically where we opened and where the prior day closed. So here's the prior day's close, 36.91 quarter, and then we opened right here. Look at that. I mean, the first half hour of trading, yikes. Just absolutely brutal. 5 points of range, 4.5, 5 points of range, all through the first half hour. Really, really boring. And then it finally starts climbing, creates what is the smallest initial bounce of 6.5 points since sometime in August. We poke through that bounce. We put in essentially a weak high. We poke that weak high by a tick and then start selling off. And we have what's called a neutral day. Really, I've got to tell you, I mean, the extent to which we have pulled the air brakes on this market's quite amazing. We have really dropped incredibly in volatility, of course, with the election behind us, and with some some direction towards resolution with this vaccine deployment by the UK. The market is starting to calm down. The volatility, the VIX is still pretty high, whereas the historical volatility of the ES is around 13% versus the VIX is 20 to 21%. So there's still some volatility built in there. It's just not translating to market movement for us currently. We dipped down into 36.77. If you recall, I was looking for it to push towards 3,700, come back 36.89, and then I was looking for at the bottom of scenario one, a push to 82 and 78. Those are the key areas, and this is why it's really important to outline your key areas. There's the dip. This actually is today's levels. Again, we're looking for 82 and 78 yesterday, and we ended up pushing to 82 right here and 78 right here. So we didn't quite test the 3,700 up here, but we did touch the levels on the downside. Overall, just it kind of brings into question whether I should move into the NQ and crude just as I did with prior years where it was just absolutely dead in the ES. I expect this to be a temporary phenomenon. ES Delta strong throughout, even though price was completely sideways. The Delta was a buyer. We do have a profile that had incredibly sharp kurtosis at the open, and then extended it with another high volume node to the upside with a weak high. Overall very poor. Yeah, I should go travel. Maybe you'll get more volatility. I'll take one for the team. But overall, pretty confusing structure, and it brings us to just take a look and see what the heck is going on the daily. So the daily, again, as I cover every day because it's important, we're one time framing up higher lows on the weekly. We put in a high, we have a lower high, and then we are likely to trigger a lower high again, and I'm expecting a lower low. So today is likely to initiate one-time framing down. The one-time framing brings us back to 67.50, brings us back to 42, and the gap zone that remains under here, and then the 27, and then the 08 again. This is, if we rotate down, those become key targets. If this thing has any energy in it to the downside. You can see the delta momentum still to the positive. There's still money kind of quietly buying all the way up here. But yesterday was an inside day to Friday with a lower high and a very balanced. This yesterday almost looked like a non-trend day, which generally is reserved for holiday trading. Really, non-trend days are days. This, by the way, yesterday does not fit the qualification for non-trend day at all because non-trend days generally do not break the initial balance and have a very tight range and very low volume. We did have a tight range and low volume. We traded about 800,000 yesterday, but we did break the initial balance high and low. So anyway, this is where we stand. This is the big picture. I'm expecting it back at the 67.50 today. That's the big target for today, and that's all there is to it. So let's take a look at what's taking place overnight. Again, I'm going to turn these levels off because they are for today, not yesterday. Here we are. This is Friday. This is inside of Friday yesterday. The trade occurred within the Friday balance. So we have 2 days of perfect balance, and then we sold off. This is why the overnight inventory is short. We sold off, and we have established value a little bit lower. We're holding on to basically a three-pronged profile in the overnight, which will likely get wiped out as soon as the day starts, and we find ourselves where we find ourselves on top of the overnight point of control, the full session mid and the full session VWAP. We are finding ourselves on top of all those three things, in addition to yesterday's low. So yesterday's low over here. So a lot of confluence in this area. Again, yesterday's low at 36.77 or so, 36.77 and a quarter. The full session VWAP 36.77, so on top of the prior day's low. The overnight point of control at 36.76.75, and the mid at 36.76 and a quarter. A lot's clustered in here. I'm expecting this to be a relatively choppy open. I'm expecting us to move away from here relatively easily, given the amount that's stacked in here. But this morning coming in, even with this delta being slightly negative, it's pretty much a non-event. The overnight volume is 189,000, pretty relatively in line, but overall it really is a holiday trade so far. Looking at the order flow, this is CT Bookmap, ctbookmap.pro. Looking at the order flow, look at this thing. It just has nothing. We have a nice little band here that came in that sets our overnight high. We push up into it. We don't really trade or collide. We collide with the liquidity down here, come right back up to the band that no longer existed, and then it pushes down. We end up colliding down here as well. You don't see a line there, but actually there's a print down here, and then we're holding the middle. The market is so slow and so dead that the manipulators are out in force. There's just very high incentive to just kind of sit there and play with liquidity in the overnight session and also in the day session. So I'm not seeing clear order flow characteristics. I'm just seeing kind of book manipulation a little bit, and there's not much to glean from the order flow this morning, as you can see from the heat map here. So that's where we stand. Looking at, before I do this, let me find it. I wanted to ask everybody. I'm gonna get to the plan for today here in a second. I want to ask everybody, and feel free to post this to the YouTube live chat, or go to twitter.com/futurestrader71 and give me your answer if you don't mind. What is the main obstacle you're dealing with in trading? What is the thing you believe, not somebody has told you or whatever? What is the thing that is just killing your trading? What is the thing that is preventing you from getting to your goals? Just tell me what that is. I'm not looking for a 6-paragraph history of where you started, where you finished. Don't really. I'm not able to read that, but just I want you to point out to me, what is that thing that causes you to sink, like that hand there in the image when you're trading? What do you believe? If I had a magic wand and I can tap your forehead to make this thing disappear, you would just be profitable. You would be, not every day, but you'd be consistently profitable. What is that thing you would wish you could get rid of or change about your trading that would make a difference? I'm very interested. Look at the answers. If you're on YouTube live chat, look at the answers. See if that's in line with what you've got. The theme generally, the theme that dominates the question, dominates the answering this question, is generally execution and the theme underlying execution and so on, these issues, the theme that underlines it is fear. And there is a cure for fear, um, but the main issue is going to be execution related. Okay, and so talking about the markets and what has happened and so on, um, it doesn't really take care of this execution issue if you have no clear way to pull the trigger, no clear way to define when there's an edge. Those execution issues just persist, and those execution issues, by the way, continue to be associated with FOMO, over trading. All of those are fear-based issues. They're fear-based issues. And at the bottom of them all, and I'm not going to do an intervention here for everybody, but this is a typical thing. The bottom of it all is is the belief that you can predict the outcome and therefore you need to study more or do more in order to trade properly. And that is a false belief. I know everybody out there sells you on a tool that makes money or some program where they can just turn you into a profitable trader, and more power to them if they can do that. I don't believe any of that nonsense. The bottom line is you don't know what's coming, and you will never know what's coming. And you will always, you and I and everybody else who trades will never stop learning. We will always continue to try to figure it out. It doesn't end. And therefore, your only job is to make sure you're risking as little as possible to find out what the market is willing to reward versus what the market is not prepared to reward for various reasons. Okay. So that's where we stand. I just wanted that piece. Again, you can respond to this if you watch this later. You're more than welcome to go to twitter.com/futurestrader71 and to tell me in just a few words. Don't need big paragraphs, no DMs, no emails, please. Just tell me what it is you're struggling with that if taken away, you can turn a profit. Let's get down to today's business. This will take just a minute. Okay, so today what we are doing is opening below the most recent auction. And by the way, let me step back for a minute and make sure we are outlining where we are. Here's where we are. We have a box down here, and we have developed a box up here. Okay, so where we are is in this upper distribution of we're in the upper distribution of this composite, of this micro composite. You've got to keep an eye on that 36.45. Got to keep an eye on it. You got to keep an eye on the 36.67. Okay, and then beyond there, the 36.27, and beyond there is 36.08 down here. It is the high volume node. It's this high volume node. So we have multi-distribution profile at the top. We have a very clean and clear distribution in the middle, 3608 being the point of control. And then we have the highest high volume node at 3557. So the market is likely, if it drops, is likely to move to 45. If it doesn't bounce, back up to 67, that is likely to drop to 27, consolidate, likely to drop 3608. Now it has accomplished balance again. If it's not able to push up, then it's likely to push down into the next split right down here in the 3586 to 90 area. If you recall, 3590 was in play a couple weeks ago. If this doesn't bounce back up, then it is likely to go to 3557. So remember, these high volume nodes, very important, okay? They don't show up always in fibs, they don't show up on your moving averages, but they are real auction points, and that's what makes trading with a profile so important. So as we see today, we're opening below the most recent auction, the 2 days that make up Friday. and Monday, and we are moving towards the 3667. So be aware of that as you're plotting out your plan for the day. So as we open today, I'm looking for an open auction, another quiet open auction. I'm looking for responsive buying back into yesterday's range. 3677 is the low, and it puts us right inside of yesterday's range. I'm expecting it to squeeze back up as far as the 3685-ish up here. I'm looking for an impulse down to give us a test of the other side, and then I'm looking for it to drop down into the 3667 down here for the bounce. So that's what I'm looking for on scenario one. 85 up here. I didn't mark it. I should. 85 up here and 67 down here. This is scenario one with a lot of noise in between. Okay. Scenario two is responsive. It opens, comes back, comes down, consolidates down here in the 70-72. So 70 down here, impulse up, pushes the 85, and then takes out the overnight high of 87.50, pushes towards yesterday's point of control and fails to continue higher. It holds the upper point of control here at 36.90 and comes back in, giving us a lower high, lower low, and a continuation of the one-time framing down. This is what I'm looking for as the main trades of today. Look, I'm showing a lot of range here, 20, 25 points. Not very likely. In scenario two, it's approximately 20 points. Not very likely, but and in scenario one, 85 to 67. But those are the extremes. I have collapsed my stops and my targets. My stops are somewhere in the 3.25 point range, and my targets are initial target about 3 points, and extended targets are structure based. It's no longer 6 or 8 points. So act accordingly. You're likely, this is the environment where you're likely to see trades go your direction, come all the way back, and then you're scratching out or taking a hit. Be conservative until the market breaks out again and volatility picks back up. Okay. Good luck, and I'll catch you later on.